CPI racing across the globe. This is global CPI in 36 charts. So what do you think? Is global CPI going to follow the US CPI slowdown? Welcome to the Become a Better Investor community. Let's get started. Remember, you can download this chart deck for free by clicking on the Get the PDF link at myworstinvestmentever.com or by clicking the link in the description. Let's talk about global markets, where global CPI has leveled off and is slowing in developed markets, but still rising in emerging markets. Now, economies across the world have GDP of about $90 trillion and an average CPI of 7.4. The developed world has GDP of about $52 trillion and CPI of 6.9, so less than the world average. And that means, of course, that the emerging world, which has GDP of $38 trillion, has a higher CPI of 8.2. So world January 2023 CPI was 7.4%, up 2.1 percentage points year on year. Month on month, the developed markets continue to fall, while emerging market CPI is rising. Developed markets was up about 1.5 percentage points year on year, but fell slightly month on month. So we've already had a couple of months of a fall in CPI for both developed and emerging, but the difference is developed continues to fall and emerging is starting to rise. In fact, emerging markets January 2023 CPI was 8.2%, which is up 2.9 percentage points year on year and is rising month on month. We'll get to why it's rising in a bit, but what's the key points here? Global CPI was 7.4 in January, up 2.1 percentage points year on year, but it was flat month on month. Developed world CPI was 6.9%, up 1.5 percentage points year on year, but falling slightly month on month. And emerging world CPI in January was at 8.2%, up 2.9 percentage points year on year, and it rose in month on month basis. So the bottom line is global CPI has leveled off and is slowing in the developed markets, but still rising in the emerging markets. So let's look at the developed markets for a moment to understand what's happening there. CPI is contained in developed markets Americas, which includes US, and it's peaking in developed market Europe and rising in developed market Asia. So within the developed markets, developed market Americas is the largest region with $25 trillion of GDP and 6.3% CPI. Of course, this includes the US. And then we have Europe. Developed Europe has 15 trillion in GDP and a higher 8.3% CPI as Europe has gone through, for instance, the war that's going on in Ukraine. And then finally, developed market Pacific is smaller at 8 trillion and has lowest CPI of the developed regions at 5.1. Let's look at that in chart form. We can see developed market America's CPI is falling and developed market Europe is peaking and developed market Asia is rising. In fact, 12 months ago, developed market Americas had a 7.4% CPI, which is now down to 6.3. That's a 1.1 percentage point fall. And of course, that's being driven by the US. This means the CPI went from being 2.1 percentage points above the global average in the US and in developed Americas to now being about 1.1 percentage points below the global average. That's the huge shift that's been happening in the US. Developed market Europe rose from 4.4 12 months ago to 8.3, so basically a doubling, up 3.8 percentage points. This means it went from 0.9 percentage points below to 0.8 percentage points above. So what you can see is that the developed markets have been, developed market Europe have been rising just like the US, but have remained at a pretty high level relative to the US. And CPI is racing up in developed market Pacific from 1.5% 12 months ago to the current 5.1. That's a 3.6 percentage points decrease. It's incredible. But it's gone from 3.8 percentage points lower than world CPI to 2.4% lower. So it's still lower than global CPI. So what are the key points? Developed market America's 6.3% January CPI is down from 7.4 12 months ago and has now shifted from being 2.1 percentage points above the global average to 1.1 percentage points below. That's due to the massive tightening from the Fed. CPI nearly doubled in developed market Europe over the past 12 months from 4.4 to 8.3, shifting from about 1 percentage point below to 1 percentage point above the global average. And CPI in the much smaller developed market Pacific region raced up from 1.5 12 months ago to the current 5.1%. Despite the massive 3.6% increase, it remains about 2.4 percentage points lower than the global average. So what's the bottom line? CPI is contained in developed market Americas, peaking in developed markets Europe, and rising in developed market Asia. Well, let's dig into that and look at emerging markets for a moment to understand what's happening there. So emerging market CPI is rising in Asia, Middle East, and Africa, and frontier markets are on fire. So emerging markets America had a small GDP of $3.8 trillion and CPI of 7.9. So a little bit higher happening in emerging Americas versus developed Americas. Emerging Asia had a massive GDP of 25.7 trillion and a very low 3.2% CPI. That's in emerging Asia. Emerging Europe had $3.9 trillion in GDP and a massive 23% CPI. The emerging Middle East and Africa had a small $1.7 trillion GDP and a high 10.2% CPI. Finally, frontier markets had 2.9% GDP, $2.9 trillion in GDP and an incredible 30% CPI. Unfortunately, the emerging markets are on fire. So, emerging America's CPI was 7.9 in January, down slightly from 8.5 12 months ago. And emerging markets Asia CPI went from a tiny 1.9% 12 months ago to 3.2 and is still 4.3% percentage points below the world CPI. So it's very low, it's been rising, but it's still far below global CPI. Most notably, this has ticked up slightly month on month in January. Now, emerging market Europe CPI was 23%. Wait a minute, what? 23%? That's incredible. And over the past 2 months, though, it has been falling, though it's still 15.5 percentage points above the world average. So there's a lot going on in emerging markets Europe. And emerging markets Middle East and Africa CPI was 10.2% compared to 3.7 12 months ago. It has now risen to be 2.8 percentage points above the world average compared to 1.7 percentage points below 12 months ago. What is driving emerging markets, Middle East and Africa? We'll look at that in more detail in a bit. And finally, consumer prices are on fire in frontier markets. They're up 30% year on year in January. This is double where they were 12 months ago. And CPI keeps rising month on month and is now 22.5 percentage points above the world average. So what are the key points I want you to take away from this? Well, the emerging market America's CPI was 7.9 in January, down slightly from 8.5 12 months ago. So emerging market America's cooling. Emerging market Asia CPI went from a tiny 1.9% 12 months ago to 3.2% and still is 4.3 percentage points below the world CPI. Most notably, this has ticked up slightly month on month. So emerging Asia is starting to rise. Emerging market Europe CPI was 23% and over the past 2 months has been falling. That's good as you think about energy prices falling in Europe and the like. though it's still 15.5 percentage points above the world average. And emerging markets, Middle East and Africa, CPI was 10.2% compared to 3.7. That compared to 3.7 12 months ago. And it's now risen to be 2.8 percentage points above the world average compared to 1.7 below 12 months ago. Consumer prices are on fire in frontier markets, up 30% year on year in January. This is double where they were 12 months ago. CPI keeps rising month on month and is now 22.5 percentage points above the world average. What's the bottom line? Emerging markets CPI is rising in Asia, Middle East and Africa, and frontier markets are on fire. So now let's look at the developed market countries where we can see what's driving the inflation in this region. CPI is flattening in major developed markets, and that's led by CPI fall. So in Americas, the countries are US, Canada. In Europe, it's Germany, UK, France, Italy, Spain. And in the Pacific, it's Japan, Australia, Singapore, Hong Kong, and New Zealand. So we're going to look at the top 5 of these, which is US, Japan, Germany, UK, and France. So US CPI was 6.4% in January, down from 7.6 a year ago, and it's gone from 2.2 percentage points above the global average to 1.1 percentage points below. That is the major contributor to what's happening in the Americas with CPI. And February just came out for the US CPI at 6%, so falling further. Unfortunately, February numbers are not out for all the other countries, so we're now focusing on globally on January. Now, Japan's CPI went racing up from 0.5% 12 months ago to 4.4% in January. Though it remains at a deep discount to the global average, it appears to be closing that gap, but it's an incredible rise. Germany's CPI doubled from 4% 12 months ago, which was 1.4 percentage points below the world average, to 8.8% now. That's 1.3 percentage points above the global average. So still above, but just by a little bit. UK CPI started 12 months ago relatively high at 5.4% and is now doubled to 10.2%, though it's fallen month on month. And France's CPI was a low 3% a year ago and has doubled to 6.1%, which is still 1.3 percentage points below the global average. So only US CPI is falling year on year, and UK has started falling month on month, and Germany, Japan, and France are still rising. What's the key points? US fell to 6.4 in January and 6% in February, though we're not highlighting February globally because we haven't got that data. Going from 2.2 percentage points above the global average to 1.1 percentage points below. That's the big shift. Japan's CPI increased by 8 times from 0.5% 12 months ago to 4.4% in January. It's an incredible increase in Japan. Germany's CPI doubled to 8.8%, going from 1.4 percentage points below the worldwide average to 1.3 percentage points above. And UK doubled to 10.2%, though it has fallen slightly month on month. France's CPI doubled also to 6%, which is still 1.3% below the global average. So what's the bottom line? CPI is flattening in major developed markets, and it's led by US CPI fall. Let's get into the emerging markets where it gets interesting. CPI uptick in emerging Asia giants, China and India, and it could keep the emerging market CPI rising. So as the US CPI and others are starting to fall, emerging markets could be rising. So this is a look. If you download this slide deck, you'll be able to see all the major emerging markets. But in Americas, it's Brazil, Mexico, Chile. This is ranked, of course, by the size of the economy. In Asia, it's China, India, Korea, Indonesia, Taiwan, and Thailand. You may ask me, Andrew, why is Korea and Taiwan? I thought those were more developed countries. That's because I always use the MSCI classification as developed versus emerging. And because of restrictions in the trading in the stock market in Korea and Taiwan, they end up being classified as emerging. In Europe, the emerging markets are Russia, Turkey, Poland, Czech Republic, Greece, and Hungary. And in the Middle East and Africa, it's Saudi Arabia, South Africa, and Egypt. And then frontier, these are the largest frontier markets: Argentina, Nigeria, Vietnam, Bangladesh, Pakistan, and Kazakhstan. So we're just going to focus on the largest of these. That's China, that's Brazil, China, Russia, and Korea and India. So let's look at them. CPI is rising year on year in China, which is also happening in India and Korea and Russia, but it's falling only in Brazil, and that's year on year Brazil. So China's CPI at 2% is low, but rising. 12 months ago, it was at 0.8%, and it has been slow to rise. Partially because of the COVID lockdown, it is 5.4 percentage points below the global average and could rise substantially. I think out of all of this, this is one of the big issues, and that is China inflation is very low, and if it starts rising, it's not only going to cause inflation in China, but the exports of goods and services means the export of that inflation. Now, India's inflation is 6.5%. That's the CPI. It was almost flat compared to 12 months ago, hovering at about the global average. So this is interesting about India. It's been pretty steady on the CPI front. It started with a relatively high CPI. Korea's CPI at 5.2% has been steady at about 2 percentage points below the global average and is up 1.7 percentage points from 3.5% 12 months ago. And Russia's CPI was 11.8% in January and has been on a steady decline from its 18% peak in April when the war started. And though it's still 4.3% percentage points above the global average, definitely it's coming down. Now, 12 months ago, Brazil was struggling with CPI of 10%, but previous aggressive rate hikes have cut CPI in almost half to 5.8%. Taking it from 4.9 percentage points above the global average to 1.7 percentage points below. I think this is another major one that's happening in the emerging markets, is that Brazil has brought down its inflation substantially. So the key points: China's 2% CPI is 5.4 percentage points below the global average and could rise substantially. India's 6.5% CPI has been steady at about the global average, and there's a low risk of a shock in India because it's been at that pace for a long time. Korea's CPI of 5.2 was up 1.7 percentage points, but has been steady at about 2 percentage points below the global average. And Russia CPI has been on a steady decline from its April 2022 18% peak down to 11.8. Over the past 12 months, Brazil cut its CPI in half to January's 5.8%, moving it from 4.9% percentage points above the global average. Again, this is a major one, to 1.7 percentage points below. What's the bottom line? CPI uptick in emerging Asian giants, China and India, could keep emerging CPI rising even if it starts falling dramatically in the U.S. Now, there are some other charts in this chart deck, and remember, you can go to my worstinvestmentever.com and just click on the button Get the PDF, and you can get this chart deck to understand more. I looked at the countries that had, in the developed market, that had the highest level of CPI. The largest economies in Europe have seen significant rises in CPI from average to above average, though in Sweden, Italy, and UK, it could be peaking. In developed market, I was looking at the lowest CPIs, and we can see Hong Kong, Switzerland, Japan, Israel, and Spain. The developed markets that have the lowest level of CPI are all rising, except Spain, which was exceptionally high in first half of 2022. But even Spain rose month on month. And let's look at the largest rise in developed markets. Sweden, Austria, Italy, Portugal, Germany. Of those countries with the largest rise, Sweden, Italy, and Portugal have started to fall month on month, whereas Austria and Germany continue to rise. And the developed markets' smallest rises are happening in US, Spain, Belgium, New Zealand, Canada. And the emerging markets, let's look at emerging markets for a second. The highest level of CPI is happening in Argentina, Turkey, Sri Lanka, Pakistan, and Egypt. 3 frontier markets have extremely high CPI. That's Argentina, Sri Lanka, and Pakistan. Argentina is getting crushed with nearly 100% CPI, and it just keeps rising. Egypt and Pakistan are on a steady rise. Turkey and Sri Lanka are falling. They've already had their hits over time. Now, let's look at the lowest level of emerging markets. That's China, Taiwan, Saudi Arabia, Malaysia, Jordan. Now, pegged to the US has helped frontier markets Jordan and emerging market Saudi Arabia keep CPI reasonable. And Malaysia has always been a low CPI country. What about the emerging market countries with the largest rise? Well, that's Argentina, Sri Lanka, Egypt, Hungary, and Pakistan. And then the emerging market countries with the smallest rise, well, that's Brazil, where they've tried to take care of it, Taiwan, India, Mexico, and Greece. So that wraps up CPI racing across the globe. That's global CPI in 36 charts. But before I close, what do you think? Is global CPI going to follow the US CPI's slowdown? Remember, you can get this chart deck by going to myworstinvestmentever.com or clicking on the description in this video. Let me know your ideas and your comments, and I look forward to getting your feedback.